30,000 people were dead from the explosion, many more due to radiation. In the eyes of the world, Japan was finished, but within the next 5 years, Japan's economy was booming. And by 1980s, Japan was on its way to beat the US to become the next superpower. But this zero to hero story of Japan was cut short because of a few decisions. These decisions made more damage to Japan than the nuclear bombs, leading to 20 years of economic stagnation, a period Japanese called Ushinawareta Nijunen, or the lost decades. What were these decisions? And why did it break Japan? Let's start in the 1980s when Japan was exporting automobiles. Toyota, Hyundai, Electronics, which is Sharp, Panasonic, Sony, and even semiconductors. Thanks to the Japanese government's MITI, which is Ministry of International Trade and Industry, they had implemented policies like low interest rate loans and tax incentives to support and promote exports. 1985 is where things changed. Japan and 4 other industrialized nations met at New York's Plaza Hotel and signed an agreement to devalue the dollar. These countries felt that the USD was overvalued and their own currencies were undervalued, so Japan and others sold their US dollar reserves. This had 3 consequences for Japan. 1, the value of the yen went up, making Japan's citizens richer than ever before. 2, the exports from Japan reduced and imports increased. And 3, because exports reduced, GDP growth reduced by half, from 10% to 5%. Looking at this, the government lowered interest rates, which gave people cheap loans. People invested money recklessly for 5 years. And that led to 1990s, where land prices, stock prices, and all the valuations were going sky high. Doesn't that remind you of something? Anyway, the Nikkei Stock Exchange, which is Japan's leading stock market index, reached its all-time high of 38,957 on December 29th, 1989. In other words, there was a bubble, an asset price bubble, which we just went through in India. And the thing about bubbles is sooner or later, they burst. That's exactly what happened. The Nikkei stock average lost more than 60% of its value between 1989 and 1992. Real estate prices in Tokyo fell by more than 70%. Japanese companies that had overinvested in stocks and real estate faced bankruptcies, which led to job losses and wage stagnation, further slowing consumer spending and economic growth. This was the beginning of the lost decade.